We're good. All right, so everybody sees the screen, and I'm obviously talking to people so you can hear my voice. Let me lower all these squawk thingies. All right. So thanks for stopping by, everybody. Very interesting day, to say the least. Interesting close. All right, and a couple things I wanted to discuss today, okay? Because as bullish as it felt today, it's been, and we've been talking about this. It hasn't, at least for me. I don't know about you guys, but it hasn't been easy, put it that way, in individual names. I haven't been comfortable in individual names of late at all. And reason being, you have basically what we've been discussing for quite a few webinars now. You have this fear trade that appears bullish and has been holding markets, the indices up in a sense, but it's not risk on behavior, right? You have this money piling into big tech growth, not almost, but out of fear, okay? And a lot of these names, especially when they trickle down to the underbelly, that's a different story, right? You're seeing an appetite for risk there. But, you know, the Microsofts of the world, a lot of the largest software names, you know, the Zoom has seen money pile in. That's basically, with all the liquidity out there from what the Fed has done, okay, and just their rhetoric in general, and rates being where they're at, money had to find a home, right? And they bum rushed into the market. They bum rushed into everything initially, okay? And then at some point in the rally, they stopped buying everything, right? That's why, like, a lot of the junk out there, the airlines, you know, look like this, right? The cruise lines. And even some of the cyclical names that we've been looking at recently, okay, they look constructive and bullish, but nowhere near that bum rush into the semis and the Microsofts of the world, right? The Apples of the world, nowhere, doesn't look anything like that. All right, so at some point during the rally, right, after the shorts got squeezed, after the initial buying and all that stuff, money went into these antivirus, let's say, issues, okay? And that's what's been holding up the market for a decent amount of time here, right? They get overheated in a sense. They don't even sell them, but, you know, they'll catch their breath. They'll go into some of these cyclical names. They'll go into the airlines for a squeeze for a day or two, and then they go right back into the Zooms, right? This is what Zoom looks like. D-Dog, all these ridiculous names, right? SE. So anyway, just to rewind now where we're at, and this is what we've been discussing as recent as on Sunday's webinar, okay? Just to get everybody, because this is open up to everybody here, so I need to get everybody caught up to date where we stand. Coming into the week, all right, so coming into this week, we had a bullish signal on, as far as tactical sentiment's concerned, short-term sentiment, okay? And a lot of you guys out there who have been on the Tuesday webinar, whether you're a member or not, you probably remember the game plan, right? The playbook, in the sense of what we were looking, generally what we were looking, where we were looking for entries, where we were looking to be careful as far as any new risk, at least an outline, right? So what we wanted to do is we wanted to look for entries, if you remember, at the bottom of a range where tactical shorts started to lean a little too aggressively, right? There was some capitulation from tactical bulls. Now we're talking about traders here, Okay, so things move quick. We're not talking about positions. That the intermediate term and positioning sentiment we've had in our back pocket throughout this whole rally. We're talking about tactical sentiment we wanted to take advantage of. Okay, and if you guys remember, we had a bullish signal here. We get that snapback, right? We talk about playing for that snapback squeeze. We just had another one recently. Okay, a couple of them, I think, if I'm not mistaken. I think one here and one just recently. Okay, and that's kind of for any overnight stuff, not to get caught up in the chop and complain about the chop and the premium drain and everything else you hear from a lot of players out there when you go into a breathing pattern like we're in now. That was the general outline, okay, to what, how we wanted to approach these markets, okay? No patting on the back, but that's when we got overheated here, okay, we were looking for some sort of consolidation, right? At the least, that's what we wanted. And once we saw some evidence of that taking place, that was our outline, our game plan, okay? A monkey wrench that was thrown into the equation, okay, which has made stock picking a little trickier in a sense, okay, is the NASDAQ. Okay, you had the Dow, the S&P, the Russell, they all pretty much have a same pattern formation of consolidation, right? The NASDAQ does not, okay? And the NASDAQ has been still in this steady grind higher uptrend, right? Rather than going into consolidation here, right? Here's the heat, pretty visible on the screen. So here's where everything else went into consolidation. This thing snapped back because of big tech, because of software, because of those fear trades out there. This thing snapped back and actually rallied to a new high. And then another little breather here, okay? So the reason why things have been a little trickier for me anyway, I was really interested in looking at some of the new economy names, okay, not the Microsofts of the world, but some of the other names out there, including software, including gaming, including some of the recent IPOs, to catch their breath and allow us to find entries off pullbacks and breathers, okay? That didn't happen, right? That didn't happen because there was still a ton of momentum in the market, all right? Everything else has done nothing, okay? So, we hear a lot about, and we were talking about this on the last few webinars as well. You hear about a lot of euphoria out there. You hear about a lot of bubbles and heat out there. They've been in a certain group of stocks in a sense, okay? A lot of the market, a huge chunk of the market, okay, hasn't really participated of late for a while now, all right? That's, I think, the upside risk going forward, all right? If you remember, I think at the start of the breather, right, at the start of this breather, we were discussing a max pain trade. You guys remember where they punched bulls in the jaw, some of the late non-believers that started to chase into this heat, they get punched in the jaw, right? A lot of them will flip to the put side, trying to catch a rollover in the indices, okay? And then you get a full participation rally that can really put some numbers up. Because you got to understand, a bulk of this rally, we haven't had that full participation. A lot of people have been looking at that as a bearish thing, okay? But if it was bearish, it would have weighed on the markets a long time ago. We wouldn't be here. This market, they've thrown everything at this market so far, and this thing has been resilient to say the least. And again, thanks to the Fed and everything else. I get it. But I'm just saying that you had a lot thrown at this market if they wanted to knock it down, and they couldn't. All right. So make a long story short, for me, it's been tricky because we haven't seen any convincing flow in a lot of the cyclical names. Okay. Like in other words, usually when I want to make a play on the cyclicals, I'll see missiles come into Caterpillar. You know, we saw it into coming out of the election weakness when Donald Trump got elected, right? We'll see missiles come into UNP, a tranny, a CSX. They all look great, okay? But we haven't seen that. What we see is when they come into these cyclical names, they sweep short-term, weekly, bi-weeklies in cruise lines, airlines. Sometimes you get a little cat sweep, you know, sometimes you get some commodity flow, FCX flow, that sort of thing, which also looks good. But they haven't really leaned into these things yet. And to me, that's a scary thing. That's a scary thing that these things are where they are, and there hasn't been any real buying anywhere on any of these things. All right. But the problem for me is I haven't had the chance to get my hands on any of these things because the flow hasn't been there. Okay. We've seen some semiconductor action, and a lot of us are most interested in the semis, right? We all think of like NVIDIA as a semiconductor, which has just been an animal, but the cyclical semis that trade with cyclicals, they really haven't done much. Micron, right? Texas Instruments caught some big action, had a nice move, consolidated. NXPI, Cuervo caught a bet recently. LRCX. If these things ever got hot, good night, Irene. And that's what we were talking about. That's where the likelihood of the true melt-up will probably show up. You know, where hedge funds, all the non-believer money has to chase all these things, right? A group like the semis, that starts to get away from them. They don't have exposure. They got to scramble to buy semis. It could get ugly for them. All right, so that's what we're kind of, you know, that was the Max Payne scenario coming out of this. And what, you know, we wanted to see signs of while we have been in consolidation here. Okay, let me go to ES. So where are we now? Okay, the likelihood is coming off this 2-day rip, short-term sentiment's probably going to be hot. Let me just show you guys something quick because I want to, this is what I want. Let me just show you guys something here. If you remember, I was getting a lot of questions as far as like the options, the speculation in the options market, right? How much heat there was out there. Should we be worried? Is it a sign of a top? And I'm not saying, I never said to ignore it, as you guys know, but the option sentiment, especially the day-to-day option sentiment, can get washed out so quickly that if you build a bearish bias, you couldn't make any money short in this thing that we've been in anyway. It's been ridiculous. All right, so here, this is what a lot of people, for good reason, were talking about and showing me. All right, this is option buyer sentiment gauge. It measures, all right, options buying up here. There's a lot of bullish call buying, okay, which means spec money in the options market. Tactical traders are leaning a little too bullish. But look what just happened here. Like you would think we just got hit with a nuke. Look where this thing is now. You know, did we crash and I missed it? Like that's what I mean. That's why you don't want to get too hung up on this shorter term sentiment, because it can get washed out so quickly, especially when you have the noise, legitimate noise that we have. We have something we've never experienced in our lives before. Anybody here who's been trading the game 60 years, a virus and a health-related issue, right? And that in the background. Any little weakness, you're going to have people calling for Armageddon. Okay? That's the beauty of the wall of worry. That's why we didn't want the melt up here, and this pull, this breather came in the nick of time. Right? Because if we would have melted up there and everybody gets bullish and everybody jumps all in the pool, the pullback wouldn't look like this. The pullback is just this because there's no selling. Nobody owned anything to sell. Right? You had spec options players that are going to flip bearish after 2 days of selling. The positional players out there, they didn't own anything. If everybody was all in the pool, this could get ugly. You know, this could get ugly because of the amount of supply that would have came in. All right, so just going over what we've been talking about, you know, each and every week on these webinars, just so you guys get the gist of what I'm trying to explain to you. All right, so where we are now, not much has changed, right? The positional money out there, for the most part, at most they've dipped their beak. Hedge funds have covered shorts to this point. That's it. They not even close to all in long, not even long, they've covered shorts. Okay, the majority of their long book is in software names. They're short every cyclical in its mother. Okay, so they're like fully hedged neutral. Some of the other positional stuff, like you saw the BAML bull bear indicator and all that stuff, you know, still not at zero, but still at or near bullish territory for the most part, all these things. All right, so the positional stuff is still there, and that's a bullish thing. All right, I got this too, which we looked at last week. Hold on. Out of Goldman, a couple of you, I got some feedback from you guys. You like the Goldman indicator there. All right, this is not all the stuff we look at. Some is different, but you know the basic premise. Okay, so it may not be exact. All right, so you're paying attention to the dark blue diamond. Okay, that's where the reading is now. The light blue's 3 months ago, and the orange is a month ago. But pay attention to the dark blue diamond so you don't get too confused, okay? If we were at a bullish extreme, meaning euphoria, everybody bullish, everybody all in, the average of all these indicators would be here, okay? Instead, it's below neutral here, okay? All the momentum stuff, right? The short-term stuff, momentum, options, and all that stuff. That was the stuff that was heated. Remember we were looking at? Okay. Some of it still is hot, moves around. Options cooled off here a bit on theirs. That's the put to call. Okay. But everything else that measures intermediate term horizons or positions is under neutral, if not this. Okay. So it's telling. All right, it's telling. And that's why, you know, throughout this consolidation, it's easy to get bared up with the news, but shorting is tough enough in this game. Positioning, as far as overnight shorts, right, is tough enough as it is in this game. You really, if you're looking to ever short, you want at least everybody to be in the pool so you have some momentum by it. You don't want to go against the current, you know, in a bull move off a breather. And because this is exactly what can happen to you, right? What we just saw in this market. This is what makes shorting so difficult. Look what they've done here, okay? They frustrated both every bull and every bear possible here. Shorts couldn't find not even a window to make money. Like, not even a window, right? At least bulls, if you were paying attention to short-term sentiment, you had an entry here, you had this recent entry, you could have made a little bit of money. The bears, where are you shorting here? You're shorting here, and you got to deal with this? to make what? You know what I mean? So that's why it doesn't pay to get bearish, even if you're seeing a little short-term heat. You stay in cash, you let things come to you, and that's why the game plan we were calling for, even though we weren't extremely bullish and we felt from what we were seeing the market could go into some consolidation, we would want that. Doesn't mean you have to put your money behind something just to lose it, right? You wait for certain spots, you day trade, look for certain long entries where the risk reward's a little bit better, and you wait until the dust clears and there's a better setup coming out of this. All right. I see people talking about Robinhood. Robinhood is a pimple on this market's ass. Forget about Robinhood. Okay. Robinhood, they're buying penny bulletin board delisted names, okay, that have nothing to do with the market, nothing to do with sentiment. You know what I mean? Nothing. Forget the Robinhood. They're buying Hertz, exactly. You think Sharpies care if Robinhood players are buying Hertz? Let them buy Hertz and lose their money. They couldn't give a shit. You know what I mean? It's got nothing to do with anything. It's got nothing to do with anything. What happened was all the option volume indicators swelled when we had the lockdown, because there's no sports gambling, no casinos. All the degenerates had to do something. They stumbled across options and they lost their mind, right? Because options are gambling. I mean, let's face it. So what happened was the volume as a whole swelled, and as the market went up, they obviously were riding momentum, playing calls, okay? But as soon as the market goes down a couple of days, they're flipping the puts. As a matter of fact, the leveraged ETFs, they showed bullish leveraged ETF volume skyrocket on a couple up days. And then one down day, you saw the bearish ETF volume. I showed you guys the chart from Sentiment Trader. It was ridiculous. One down day, whoop, they flip sides. So that's not, that's not what we're talking about here. We're talking about the big money out there, okay, that can't be as tactical, right? Us, we're not managing money. We can press a button and get out of something, especially if we're in, weeklies. These guys on Twitter, they're playing weeklies. There's no conviction behind it. One down day, they get wiped out. The sentiment becomes a problem at an extreme on the bullish side when the positioning money is all in and they get stuck, okay? Because they can't be as nimble. The only thing they can do is hedge, and by buying puts and hedging and buying volatility, that snowballs into putting pressure on the indices as well. And then they get margin calls, and that puts pressure on the indices even more. You understand? And that's where you get that vicious selling, kind of like what we had here. Kind of like what we had here is a perfect example. Now, you had even a legitimate reason behind it, like, I'm talking about like an exogenous reason with the virus. That's why you had a crash. It doesn't always have to end up in a crash, but those harsh corrections almost always end up when everybody's in the pool. When we're not even talking about the pool half full or 3/4 full, when nobody's in the pool, you really, the more you got to get hit by a nuke to see that type of selling. So because shorts are going to have to drive the ship, right? There's nobody owns stock. Who's going to sell? And the odds are there's so much money on the sideline that if the indices came in, they would probably look to put money to work because they missed a whole rally, right? You see the logic there? It's not me making predictions. It's probability of buying and selling out there. That's all it is. All right, so some of you must be saying, all right, that's all fine and good and great and lovely. Where are we now? Okay, today, yesterday and today, from just what we're seeing now, okay, no predictions out there. You guys know I don't like to forecast anything like that, all right? Nothing really changed. The only, I think the most promising thing that we've seen in this rally has been the cyclical participation of it. Okay, but that was due to happen anyway, wasn't it? And the cyclicals needed to see some rotation anyway. Okay, because they've come in and they've been ignored for a while. So we've been in this breathing pattern since this thing has started. And the only thing that's going to get me thinking that we are ready to come out of this consolidation with some gusto behind it is if I really see them come after these names flow-wise. You know, otherwise I got nothing else to base it off of. I'm just being honest with you guys. And throughout my career, sweepers don't need to necessarily nail the lows, right? They can show up late. In other words, they don't have to be in at the start of a rally, okay? But what usually will happen is, like, let's say rallies tomorrow, right? Then you get a little pull, they'll show up there. You know what I mean? They show up at some point in an aggressive manner when things are ready to turn. So I'm looking for the flow to kind of guide me out of here. What I should be doing, and I've been a little gun shy, is like I should probably be in a Corvo. I'm not. You know what I mean? Like some of the names, even though they've been selectively buying, some of the names they did hit hard, I should own. And I do not. So that's where we are right now. That's where we are. Okay, right? We were talking about this again. If you remember, this is the discussion we had. We could come to the top of this range here very easily, and nothing changed. Just like we came to the bottom of the range, and nothing's changed besides we wanted to look for an entry, right? This is what we've been in. All right, you want the ideal scenario? Okay, the ideal scenario. I'll give you the ideal scenario. The ideal scenario is you stay in here, you do some more consolidation chop. Okay, just stay in here. I don't care if you go sideways and not even move. Okay, you stay in here, but you get some of these intermediate indicators to line up bullish, flash bullish signals, and then every down tick, we want to buy something. So in other words, you get all of these here, right? So for us, like, let's say this is the short-term stuff, right? So you get all these blue diamonds lining up on this side of the map, and then you look to put something away with decent time on any dip, on any tick lower, not even dip. That would be the ideal situation, knowing there should be a solid floor underneath those levels. And that's back to where we were near at the lows. Now, again, maybe I'm being too greedy here, right? I'm looking for the same type of setup that we had here, basically. Can we get there? I think we can, you know, with a little weakness and the virus talk and worries about reopening and stuff like that. I think if we come, you know, down and test these lows here again, I think they'll all be there. So I don't think it's that far-fetched. But maybe I'm asking a lot out of it. I wouldn't be asking a lot if I was seeing enough flow to get me excited. Like today, right? Today, you had this nice, smooth, all bullish order flow tape today, right? No put buyers, very little put buying out there. It just, it wasn't that bullish to me. I don't know. You know, it wasn't, they weren't leaning into things. There was call buying, right? It was bull flow, but they weren't even into that rush into the bell. There weren't missiles firing. They were little sweeps. So whatever it is, it is. I have the confidence that the action is going to show up at some point anyway if this is over. All right, if this is over. And think of that, like, I got to try to be patient with like a gut feel that if we do come out of here set up, like there's going to be a significant rally. So, you know, I'm fighting both sides of it, you know, because it's bullish. It's setting up bullish. There's nothing bearish about it. But I'm trying to be as patient as possible and trying just to be active, you know, trading and making some money in the interim. You know, so we'll see what happens. Anybody you catch the setup off the sentiment signal? Well, I know a lot of you day traded it. Anybody catch any swings off that? I couldn't play it. Oh, easy there, Tiger. I couldn't play any names. Facebook. Hold on, let me let Jules out of here. Jules, go ahead. Go. Come on. You're juggling nuts. The ferocious beast. Facebook. Oh, off the poll. Anybody play anything on the indices or just names? Anybody catch any ES or SPY off the spot? Oh, you did catch TQQQ, Mercs? I didn't know you caught the TQQQ. Nice. That's what I played. Oh, quite a few of you played TQQQ. Oh, so you caught it today? Cool. Very nice. Yep. So that's what we got here. You know, that's what we got here. So in simple English, I'm either looking for flow to explode and for them to buy, because there's a lot of quality spots out there, guys. You know, there's a lot of good looking stocks out there, non-software heat. There's a lot of good looking stocks out there that if they want to buy, they have a long list to buy. So I'm trying to stay patient, wait for that. Otherwise, you know, overnight stuff, I'm just going to try to sit tight and wait for these spots and play a little something just to try and make some money and participate, you know. By the way, okay, another thing that's, I just mentioned everything. So think about this, ready? Everything we were looking for, okay, aside from the NASDAQ names that we really like setting up. That's the only thing. Everything we were looking for out of this breather, knock on wood, has been coming to fruition. In other words, filling in, you know, the boxes, checking off the boxes, okay? The other thing that I didn't even mention, that's probably, it may be the most bullish thing out of it all. Okay, so we got the Max Payne potential melt-up trade. You got the shakeout of the short-term specs. You got all this stuff, right? Sharpies are all in. Okay, can I repeat that again? The Sharpies are all in. Okay. We could just probably, we could have left it at that and come to the conclusion to be bullish here and find an excuse to buy something on any dip. Right? And the riffraff, right? Sharpies are all in. That's one side of it. The riffraff, where are they? Short. Like they're peckers. Right? So think about that. So, I mean, there's just, yeah, there's too much not to be bullish here about it. I told you my problem. My problem is individual names. I just can't get comfortable. The names I like aren't catching the buying, aren't catching the flow. So I'm trying to be patient. That's my complaint. What have you guys been doing? You guys swinging any names? Like, see all the names you guys like? CRM, that had a nice little dip there too, right? That could have been bought. Let's see CRM. CRM looks decent. You see this dip was it. But that's not where it caught the action initially, right? It caught it up here. That was the problem. Caught it up there. But if you have the patience anyway, who cares? Yeah, I get a little too ridiculous with it. Yeah, the September's, exactly. Exactly. Net, yeah, net. I actually owned net. I owned the equity. I got out of it. I sold it here this day. I sold it that day. And you've had a nice breather here, you know? But, you know, here's the thing, like net, you guys know I love the stock. The action in it is crazy. Yeah, this is not my cup of tea over here now, you know? Like this thing has done some damage already. It's done some damage. INSG, that's been looking better and better, right? That's that 5G play. Yeah, this is the other part of tech that could probably do well, John. You know, if we see cyclical rotation, they start buying all the other tech that really hasn't done anything. It's been all new economy tech. Yeah, like CLDR. You know, like CLDR. You know, you're talking about a software name that's been hot. Are you in it already, or are you looking to buy it up here? You know, that's a big difference. You know what I mean? You're in it already. So that's the thing, you know, that to buy it up here's the problem, right? If we see rotation, okay, if we see rotation and they go into cyclicals, if they come out of the software names, you might see this thing get stuck here a little bit. You know what I mean? It might get stuck and consolidate. That's one of those names. I don't trade APT, Ahmad, but AG, that's another one of my screw ups. SSRM, I was long the name. I flipped it the next day. I should have held on to that. Had a nice sweep. I probably should have just bought calls in it. These miners look incredible, and the flow's been solid. PAAS, puff, puff, pass. They buy this thing every dip. Puff, puff, pass. They buy it every dip. You know, the other name is this one, WPM. They bought some more today. Good looking name, no? WPM. So the gold miners look good. You know, we don't want to chase them now, but they look good on dips. They've been looking good on dips. Good call. You see, that had me tempted yesterday. But you know why I didn't play it, Ryan? They're Julys. They're Julys. You know, so what Ryan's talking about, we saw a bull risk reversal in Marriott. We saw a bull risk reversal in Hilton. And then we saw a sweep in H. Probably Ackman. You know, maybe they're playing into the Hilton earnings. Maybe he's playing that. You know, he's tacking on, he's adding on into that. I love the spots. Like, I'm going to look at these things tomorrow. I don't. If Marriott got hit with November's, Ryan, I'm in it without even thinking about it. How about I was saying today, Ryan, if CCL got hit with a big order, the cruise lines, which I don't even know how they function, I'll be honest with you. I just can't see it. But if the cruise lines would have caught a missile today, I would have bought the cruise lines just because I like the spot. You know what I mean? But they're just not hitting them the way I know they would hit them if they were positioning in these things. They're trading. You know, and as you guys know, for like trades, short term, Roy, I stay with equity. I don't like to mix calls in the short term stuff for me. You know, calls I solely like to buy with some decent time, take some nice size, that sort of thing. Oh, these are two Ryans. You guys are making me see two here. Ryan, which one are you talking about now? You're in August. Which ones? The Marriott? Oh, Nikola. That's let me talk about that because I know I get a lot of questions. So there's been a lot of stuff. The Nikola blocks that a lot of you see, right? They're stock replacement. Okay, you see this thing I posted today? I posted it the other day as well. So here's what they're doing. Okay, they buy deep in the money calls and they're selling 72,000 shares of Nikola. They buy deep in the money calls, they sell 43,000 shares of Nikola. You understand? You see all this? That's all that, those size blocks. Now, Nikola, what Ryan's talking about, caught a couple sweeps. That's a different story. I'm talking about these blocks that I get a lot of questions on. That's what these blocks are all about. They're stock replacement. I mean, honestly, they probably do it. Maybe they owned, what was it? Wasn't it a symbol before this, before the move? They probably owned stock a lot cheaper. Yeah, VTIQ, you know? So they probably own stock a lot cheaper. They want exposure, but they want to take a chunk of that principal risk off the table, you know? So you sell, you know, 5-10 million worth of stock and you put in $1 million worth of calls. Yeah, had a crazy run. Had a crazy run. These, all these alternative energy plays, psychotic, right? Remember, a lot of you guys were even talking about the plug. Boy, did that thing come to life. Nut. And then this name caught repeat action again yesterday, BLDP. Some good looking action in this thing, BLDP. It's a good looking stock too. That's the thing I've been doing. You know, I've been the under the radar, under the hood type names. I've been playing and playing mostly equity. Run Max, I like that name, Run. There's been some flow in that. Solar name, right? It's a good looking stock. Right back. Nice. Look at this. No sellers here, right? After that big move, nobody wants out. WKHS. Unbelievable. A few of us, we traded this thing, WKHS. at $4. Now here, 18, forget it. $4 right here. It caught sweeper activity. You know, plug I liked as a tuck away play. Like, in other words, don't try to buy front month and try to catch lightning in a bottle. Either buy the equity or calls with some time. I didn't think it was going to go like this quick. The egg hatched. But, you can't buy it up here now. You got to wait for at least a breather. Yeah, gone. That's the guys. I like all the names you guys talk about constantly. Those are the names I liked. All of them. I like them all. The problem is the spots aren't there. The spots are in the cyclical names. The spots are in these semiconductors. Like, this is constructive price action right here. Look at this. This Cuervo looks really, really good. It's not gone yet, this Cuervo. We might get another chance at it if you're not in there already. The animal, the animal. If you're going to buy one semi, LRCX is the animal. Micron, you're going to have to chase now, but I wouldn't chase a gap up in Micron. Micron, if you're going to buy a semi, in my opinion, I'd rather own quite a few others than Micron. I'd rather own LRCX. I'd rather own Texas Instruments. I'd rather own NXPI. Just because they move. Like ONC, I didn't buy it because it's slow. It's just slow, But the flow is legit, John. Just make sure you have patience. Like, you see the names they played today? I day traded them all, but they were molasses. Wendy's. Like, come on. I'm being patient to buy Wendy's. It looks okay, but this thing is a turtle. Wendy's. So I'm going to watch. I'm just going to come out of these stocks that I sold early, like an SE or a Workhorse, and I'm going to go park some money in Wendy's right now. That'll drive me nuts. The other name to catch action today, MT, ArcelorMittal. What am I going to do with this? Yeah, this is, these aren't movers, right? This is not what we want to play, for Christ's sake. Oh, God, they're torturing me. But, that's where the action was today. Net, MT, and ArcelorMittal. And then later on in the day, they gave us Dish. That was a nice mover. That caught some nice action again today. Dish. Jeff, they had earnings. We were trying to figure out, we couldn't find all of us had different dates for earnings in Jeffries. And it happened to be yesterday. So somebody wanted to get in before, I guess, the buyout, or I don't know what the hell that was. ZI, yeah, I would love to see a sweep in this thing. I would love to see a sweep. But again, this is not cyclical. If software names are heavy because they need to correct, this thing might get stuck here for a bit. They might get stuck. All these names might get stuck. Even like a net, that could get stuck if the software names are out of favor. See, we don't know that. If they rotate into cyclicals, are they going to rotate out of these hot names? Are they going to actually take some profit in SE for a change that needs to consolidate, for Christ's sake? Put it this way. If I had high conviction that these things weren't going to rotate out of these things, then I would be playing these things. I would be swinging these things. That's what my concern is, though. You know what I mean? That's what makes this whole stock picking in what we have now so difficult. It's not that easy. I'm being honest with you. You know, you could be in a net, okay? And you could be sitting in profits. And you could have a major breakout in the market and this net be down over the course of that. That would drive you nuts, no? That realistically, it's a realistic situation for all the software names. You know, because look at the leaders here. Look at them. Like, come on. Look at this. Plan trades like a cyclical. Plan trades with the cyclicals. It doesn't trade with the software names. Don't ask me why. You know, don't ask me why. How do you know what sweeps to go with? Every day what I do is I try to put this out there, right? And that's the top action for that day. You know, some are repeat activity. You know, initially I didn't even want to put repeat activity on this list, but I was asked to by quite a few of you because either you're in the name or you want to know just in case if there's a dip in the name. So I put them on here anyway, right? Because like net, that's not an initial activity. That's a repeat bet, higher level than where they initially hit it. But every day when there's action, I put a list like this on there. So when you see initial activity, you know, that's where you want, that's the bulk of your swing should stem from there. If you're just trading off flow. Now, if you're trading off technicals, you can use all of this. You know what I mean? Any of this action. Here, you know, here's another name, AAXN. Good looking stock. Repeat activity. That's the old taser. Consolidation. You know, it's up at new highs. See, this is not my cup of tea, though, but it looks good. You know, it looks good. You guys know what my cup of tea is. All right, all the cyclicals, every cyclical, every rotation name prior to today was at a spot that I want to own. You see, like the cruise lines? That's my cup of tea. Okay? Selling, 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 selling. It burned all these chasers here. If a missile shows up here, I want in. Right? Because what's that telling me? Somebody who likely knows a lot more than I is aggressively betting on a change in this pattern, in this trend. That's what I'm looking for. Okay? Not here, right? So what happens as opposed to the call buying here? So what happens is CCL, you see call buying, call buying, call buying, call buying, more call buying, more call buying. The retail player waits to buy it here because this is not getting them excited. Now they see the stock moving. Now they want to own it and they get the shaft. Right? So now this has all been destroying all these chasers. If a big bet, aggressive bet comes in here, I like to play for that squeeze. You know, or if I like the name and the bet is with time, I like to play for more than a squeeze. You know, the other stuff, there's not, outside of momentum, there's no big edge out of flow. There's no big edge period, like Apple. What edge you think you have in Apple? There's no edge anymore in Apple. The whole world likes Apple, you know? Everybody's long Apple. What pullbacks? There's no pullbacks. These pullbacks? These? Yeah, for what though? For what? For a trade? Or are you talking? So in other words, you're telling me I'm going to buy Apple here and look for what? You know, a big move from here. The risk reward. Oh, quick trade. You could play any of these things. Everything. You know, everything you could play for a quick trade. Or sweeper activity. Everything. You know, that applies to everything. But I'm talking about like swing positions with time is a whole different ball game. You know, don't get me wrong, day trading, I day trade anything that catches aggressive activity into red. Almost, I traded Wendy's and ArcelorMittal today. You know, anything red or off a pull that catches decent action, I tactically trade. But I'm talking about like building a position, giving it, you know, some sort of leash, that sort of thing. You know, for that juicy risk reward, I don't look for names up here. I like before they started. PCG caught that big bull combo today into a niner, right? I don't know when earnings are. I think I posted earnings, but I don't even know if that's a right date. Anybody have a right date for earnings, PCG? 8/7? Oh, so you got a little bit of time. 8/14. Here we go again. That's what I saw. I saw 5 different dates for a PCG. 5. Jeffries announced yesterday. Yeah, it's not even TC 2000, Dan. It's all these things. It's an estimate, you know? It's an unofficial date. That's what it is. Like, look, Jeffries, look what this was showing me. Where? Oh, I don't have earnings on this screen. God dang it. On my other screen, I have it. But this was wrong too. 7-1. I think 7-1. I think that's what I had too, Tree. I think I had the same thing, 7-1. But then in the room, like people were, there was like 7 different dates. Nobody had the right one, by the way. Nobody had the right one. But yeah, so for me, off the action, like I want to swing top shelf, the best of the flow, and I want to see it in the semis, you know, especially if they're red or any of these cyclicals. The banks, somebody mentioned the banks, they're tough because they catch a lot of flow and there hasn't been anything special, you know, but if you like Bank of America, that's a nice spot, but it's not going to be easy. Banks are like energy stocks right now. Let's be honest. No, banks are like buying energy stocks. They're tough. They're dinosaurs. Banks, it's getting to the point for a trade, it's not worth even looking, you know? If you're talking about for an investment, you want to tuck them away, you think they're cheap, that's a whole different story. You know, but if you want to trade, you want something something's gonna move. You know, like I said, the semis, the trannies. Right? If these get hot, like if there's real rotation, like we're talking about the type of rotation that can create the real melt up, these things go nuts. They go nuts. It doesn't look possible right now, but they go nuts when they have to buy them without anybody noticing them. But the tough part is they got to see buying, you know? They got to see buying. And yeah, these things look good. Look, you had this stampede off the lows, everything rallied. And this looks really good. No? That's a bullish setup right there. That's a bullish setup right there. CSX, that's a stud, that stock. Ryan, all you could throw a dart, you know, it's almost luck. CP, this thing's a machine. Prince money when they rally. CP, NSC, they're all studs, all of them. PLMR, I don't know that one. Does it trade options? Palomar Holdings, Jesus. So many stocks that you never even heard of in software, just flying. Exactly. That's you hit the nail on the head, Ryan. I know they're going to hit them, even if they miss a CSX or they miss an LRCX. They'll find, you know, the next tier down semis and bombard them. You know what I mean? They don't miss the move. They don't miss the move. And that's what we're looking for, right? What we want is we want to catch that big move. We don't want, I mean, yeah, we want the couple day trade rotation, but for me, I'm not looking to swing that. You know, that's just me. I'm not looking to swing that. I'd rather wait for the day trade setups and make my money there with less risk. You know, if I'm going to swing or build a position, you know, I don't want to be concerned about every little tick. I hate that. I see all you guys drive yourselves nuts over it. Nuts. A stock goes down one day and you're pulling your hair out of your head because your calls expire in 5 days. I can't play that game. I can't do it. You know, when you're in this game as long as I am, trust me, you can't do it. And you know what it is? It's luck, guys. It's luck. You know, if, like, for example, if somebody buys, if we see a missile, like a plan, right? Like a plan, okay? This means nothing right now, okay? If that sweeper or whoever that is who's building a position in it, if he was looking for a move over the next couple of weeks, he would have bought July, August, September, right? He bombed January's. You think he's looking at this here? He's not paying attention to that. Right, then he hit November. He came in a little closer. So that's why, you know, when you're taking positions and you're looking for that big upside, right? We keep talking about that large risk reward type trade. You know, that's, you got to be patient. You can't play. Weeklies are gambling, man. They're gambling. You know, it's like day trading. You're gambling. You need to get lucky. Tesla, July 2, 1050. Yeah. I know. That's, you get a little taste. Tesla, what a machine that is. They're probably going to run this thing up until earnings. When's Tesla earnings, by the way? Speaking of Tesla. $7.22. Wow. That's got some time there. Got some time there. All right. Anybody have any questions? I know Dan, is that you who was asking me about yields today? Okay. So he was asking me about yields I was talking about. I had him up on the screen. Shop is a machine. What a machine. I don't even know what to tell you with this shop. They swept shop. When did they sweep shop? Was that yesterday? I can't even remember. There were some weeklies in shop. Yeah, so yields. Let me see if I can pull it up. What's the symbol again? Hold on. So I could show you guys. US, is it 10? There it is. All right. So what I was referring to today with the 10-year yield, right? What you see is a lot of times when the cyclicals, the economically sensitive names, when they're rallying and you're wondering if that rally is capable of being sustained, if it's real, okay, yields should rise with them. Okay, so in other words, you see what interest, this is the interest rate on the 10-year treasury. Okay, so if yields are rising, that means they feel better about the economy. Okay, when yields are going down, they think of no growth. Think of it that way. Okay, so you can see here, this is a 5-minute chart, right? Yields have been in the downtrend, right? Not lower. The cyclicals haven't been doing a thing. So today we started to see flow in the cyclicals right out of the gate, right off the open. And what I was talking about when I showed you guys the chart, the yields were confirming that move. You understand? So it wasn't like they were just, somebody was getting squeezed or, you know, it was a quick blip in the morning. The yields were confirming that move. So it was showing that those things were in play for a reason. So a lot of people, a lot of traders I know who actively trade, they have this on their screen all day. You know, in where we are right now. You know, you could even overlap like a chart of ES or SPX with it. And you'll see that a lot of times the moves, yields will confirm a rally in ES, some of the better rallies. You get good virus news, right? You get some positive news on the virus front, the coronavirus, you'll see yields rally. You know, so you can play around with it. Look at it overlap with the S&P and you'll see what I'm talking about. But that's the takeaway from it. You know, it's just the market we're in right now. It's a tell, and it's pretty important, you know. I can't promise that's going to be the case a year from now or 2 years from now. But, you know, like a lot of times you look at maybe the dollar, right? You ever hear people, they're looking at the dollar. And a lot of times it's correlated to what the indices are doing. Right now, yields are a big tell. Higher yield is, right, think of positive economy, higher yield. Higher yield, not higher bonds, higher yield. The symbol, I keep forgetting it, but here's what I type in. US, the number 10, and then, so it's US 10Y on TradingView. You see, look at this debacle on a daily. That's because they've been cutting rates. But on an intraday basis, it's a nice tell at times when you see a rally. For now. And it correlates with the economically sensitive names. ZN is the futures for the bonds themselves, right? If I'm not mistaken, yeah, not the yield. So it would be the inverse of yield. This is the inverse of yields. So when this goes up, yields go down. When yields go up, this should go down. That's the way it's supposed to work. You know, again, you don't want to get too hung up on it, but it's just, you know, when you're looking for a rotation, it's something to keep an eye on, you know? It's something to keep an eye on. What about anybody else, especially members? Anybody have any questions on the stuff we touched earlier? You know, and listen, if you're a member, you know one thing's for sure. When I see missiles, right, And when I get excited, there's no me hiding it. There's no way for me to hide it. You know, if I see missiles coming into names that I'm looking at the right spots, you'll feel the excitement in my words and my voice. And I will tell you, I'm buying it. Yeah, is that nuts? The first year, I mean, we're in July. First half of this year is gone in a blink of an eye. What a crazy year, too, you know? Crazy year. Absolutely nuts. Absolutely nuts. That's why, you know, knock on wood, this has been a good year for a disaster of a market. Just because I got lucky, you know, with this here. You know what I mean? And things fell into place. But I just want to milk every little sucker out of this rally. You know, because sometimes things line up and you feel like you didn't make a dent. It happens a lot. Coming out of the December 2018 correction, I just feel like I missed so much in that rally, you know? I feel like I missed so much. This rally, you know, I'm happy with what I did as far as positions, aggressive. I was really aggressive, short-term trading. So, you know, I'm happy the way I played it. I would love to catch, if it shows up out of here, that would be just the icing on the cake, you know? Again, that's why I raised cash into this. You know, that's why I trimmed all those positions I had, some of them foolishly, but I wanted to raise ammo for this. Like, this is exactly what I wanted to see. The only thing different is, like I said, I was hoping the tech names were the ones that consolidate, and they just, too much money going into them. You know, too much money. There's still so many good looking names, like this AYX, the one, that name we talk about a lot, you know? Like, look at it. So good looking. MDB, little dip. It gave you opportunities. I mean, Coop is just, that thing's in a league of its own. This Coop is something else, boy. It's a great stock, great company. You know, these are the leaders. There's no doubt about it. These are the leaders. The problem is they get too crowded and they become dangerous. You know, they become dangerous. Yeah. Like see, Coop, like a lot of people know Coop, okay? But you guys, those of you who were around know when Coop was like catching action. Like, this thing was a beast here. You know, but it went through consolidation periods. That's going to happen again. It's not a question of if, it's when. You know, so entries up here, they're dangerous for swing positions. Very dangerous. Doesn't mean it has to blow up here, but you don't want to get in the habit of that. Trading, like somebody else mentioned earlier, it's a different story. You get a dip, you see sweepers in it. You know, you could have made a living out of like NVIDIA with that, you know? But as far as like, we're talking about swing positions here, that's what a lot of us are referring to. We're talking about, you know, building a little basket of swing names, and then boom, this thing breaks out from here. And you're getting paid on those. Like, that's, if you can have it your way, that's the way you want it. You know, that's the way you want it. And like I was saying, if you remember when we started talking about this consolidation, right? You get a bullish sentiment signal, add a name. You get a bullish sentiment signal, add a name. You get a bullish sentiment signal, add a name. The problem is I added Stugatz. That's the problem. You know, I traded them. I made a little money on them, but I didn't. My positions are still the same. My swing positions. That's what I'm frustrated about. You know, that's what I'm frustrated about. So we'll see. Maybe this has a little more time. And and we'll get our chances, we'll get our chances. Anyway, everything's cyclical on watch going into tomorrow for squeezes, especially you day traders out there, keep an eye on it. Some of the laggards that even they hardly participated today, some of the stocks that look dead, you see some flow coming into them off the open. I don't know what the hell this is called. Matrix something, MS. I don't think it's custom, but it's almost like exhaustion oscillator type thing. Same thing like the Niners. See, I like to look at it with the Niners. So see here? Well, this is on a daily. This is rare. Where you get Super Scion Blue and a Niner. No, it's not squeeze. It works like oversold, overbought. Not Elliott, no. It might be, it's not RSA, it might be a custom type thingy. I gotta find out what it's closest to. It's Matrix something, but it works like an RSI. But I like it a little bit better. Intraday too. I use it, well, for up and down, but I like the downs. I like the downs, for entries. See, like here, they're nice spots. Nice spots. And the daily on the overall indices works well too, but they're rare, the buy signals. Sell signals, you get them. Like here, we got a sell signal early where the Niner was. But the buy signals are really, really rare. Here's a buy signal, they're usually pretty good. All right, so the most important takeaway is if we do get the top of the range and we see some weakness, right, that's not where you want to turn into a bear and get hung up on bearishness, right? We want to remember that Sharpies are long. We want to keep, there's some stuff we need to keep an eye on each and every week. And as long as that stays intact, we got to continue to lean bullish, especially off short-term sentiment signals. That's going to be probably cooked, Ani. I didn't see it yet, but I got to believe it's going to be close to it. But sometimes it's not. We'll see. The squeezometer, I think, was mid-60s. So that's up there. But even if we have hot sentiment going into tomorrow, just keep in mind that this is not hot. You know what I mean? The market could just linger around, and they could be squeezing these things. They could be popping like popcorn tomorrow. So the short-term sentiment, what's hot out there, the stuff that's extended. There was some Jan buying in CCL. I'm just using this as an example of spot. RCL had decent leap buying back into the lows. But the reason why I would like to see some half decent flow, you could just get a short covering rally to like right here. That's mid 60s. You know what I mean, Trey? You got a decent amount of selling here for good reason. I don't know how these things are going to stay in business, but you get a little positive reason for short squeezing, positive economic or virus stuff, and this thing could squeeze easily $60 by accident. This is almost like the Boeing setup that I played, but I would rather, we'll see. I don't rather anything. Let it come to me. But yeah, they bought Jan calls in CCL. RCL had some weekly spec action, nothing major. WPM, I like that stock. I'm not a big gold mining fan, but I like that stock. That and Puff Puff Pass, they're money, these things. You know, they're money. And that SSRM off that sweep, they all look good. It's nice to have cushion. You know, it's nice to have cushion. So yeah, just keep in mind that even though we might be hot tomorrow, you know, you don't want to chase things that pop like this. You know, you want to look for some laggards. That's all. They might rotate into some laggards. This thing caught a bet the other day too, LVGO. This is a monster. This is a monster. You know, like this is a monster. These names are insane. August, I think it was, yeah. They don't give you dips either. You know, John, they don't give you dips. They give you sideways. That's what you got to buy in these things. They don't give you dips. That's how strong these things are. Like that D-Dog, what'd that do? I saw a little put selling. I wasn't sure if it was clean or not into the weakness today. Next thing I look, stock's running. These dips don't last. Yeah, D-Dog, it looked like some put selling today in it. All the way up here. I don't know how you're in Jan calls, D-Dog? Like you see, like this is a legit name too. They got crazy growth, this stock. It's not like there's no growth or anything and they're just Robinhood's pumping it. Pete Nigerian was there today. He pumped Net and he pumped Wendy's. Lulu, yeah, Lulu's a beast. DXCM, that's another beast. There's a lot of good stocks out there. A lot of good stocks. Yeah, Net, you know what it is? Net's it's been breathing, but it's almost old news now, Tree, you know? It catches flow every day, it seems. Some days it's crazy, like today. But it's just the way he's been trading. Like you see here, when I bought it too, like, look, a lot of up, close off the highs, right? Look. But yeah, this thing's been rallying now. You know, that's why like that Cloudera somebody brought up, expect that there too. You know, how many times did we trade Cloudera off flow? You know, after like 5-6 times of catching heat, you know, they're not going to move the same. They're not going to move the same. These things have had nice moves, percentage-wise. They're still good stocks, but you got to be careful chasing them, and you're just not going to catch the momentum anymore. Like they moved off the first round of action. So that's the thing. That's why we need fresh names. We need fresh names. That's what we need, fresh names. That simple. That simple. Cisco, Oracle's been catching flow too. Oracle. You know, you got like these aren't big movers though. You could definitely cash tickets in them, but you better have patience in these things, you know? Yeah, you better be patient. Chewy. Let's see, Chewy. Oh yeah, another little dip. That probably will be a buy at some point when they hit him. You know, that too, you know? But now you're going to dip, so it makes it a little better. But Chewy, you know, how many times did we trade this name off sweeper activity already, for Christ's sake? It's not new. You know, it's not new. And, you know, you look at like Coop and all these stocks we look at, it makes it look so easy. It's not that easy. You know, every little pull you feel like is a disaster when they're this hot. Spot, that got more action today, Spot. Oh my God. I didn't even pull it up today off the sweeps. I know it's so hot. You know, I didn't even pull it up. Like the breathers off Niners are like for a couple of days. Yeah, you gotta wait there. You gotta wait there. But things like this, they bother me a little. Like when I see these stocks, like that's what I feel like maybe there's more consolidation in the overall indices. Like I can't see Zoom accelerating from here. Can it happen? Anything could happen. But I just can't see, maybe it just grinds and chops around and look at this chart. Anyway, yeah, healthcare. There's a lot of other groups out there that are nicely set up. Yeah, Tesla. Tesla's in a league of its own. So many shorties in that thing. So many shorties. Tesla. Yeah, Tesla. Oh, once in a blue moon, I'll play Tesla. Because it was mostly short dated stuff. Sometimes with time, I'll buy Tesla if it's at the right spot. But Tesla's a nice day trade if it's red too, or sweeper activity. It's just a beast. The COVID plays look tired. They do. I hope they breathe. They'll be healthier. I hope they breathe. And if they do, there's going to be money that comes into probably the other end, right? The cyclicals. Like, look at this Netflix. I was talking about this breather here being decent. New highs, another breather, new highs. It's just bullish. I'm bullish all over the place. Bullish all over the place. SPY 2021. I mean, I think if things right now, everything that we wanted for that max pain upside trade is, knock on wood, is there. I don't like to make predictions because you don't know what the hell's going to happen 3 days from now, let alone a year from now. I have no idea. But, I'd like to see all like I said, the boxes get checked, right? And see the evidence in front of me. And then I can have more conviction. And, right now, just everything besides the NASDAQ names that are hot, not breathing enough, everything has been going according to plan. Everything. Plus, you got the Sharpie riffraff stuff all in too. I honestly didn't think that was going to happen. Right. Off a crash, off a 50% rally, and the economy's still in shambles. That Sharpie thing boggles my mind. It boggles my mind. I don't know what boggles my mind more. The riffraff money being short throughout or Sharpies being long. Because I told you, it doesn't happen often where Sharpies get in here all in and they don't slap on hedges as the market ramps higher like this. They didn't slap on, they slapped on hedges once. And then boom, they took them right off again. What the hell do they know? Well, maybe what they know is that the riffraff money is on the short side. Maybe that's what they know. And they don't care about anything else. Right? Maybe that's all they need to know. Yeah, that's out of the futures, the CTFC data. And there's so much more. Hedge funds, even there, was short. They had a huge short position in S&P 500 futures. They covered a chunk of it recently. You know, so there's nothing better than a rally with a pile of non-believer money on the sidelines. There's nothing better. But that's the stuff you want to pay attention to. You know, when we stop looking to buy, when we stop leaning bullish, that's basically what it comes down to. And that's when that whole pile of money, a good chunk of it, capitulates in. In all likelihood, the Sharpie crowd will probably be hedged, if not max hedged. They were max hedged here. Come on, max hedged. And early, you know, it's not like even they were max hedged right here while the market was falling. They were maxed hedged and spit on this upside. They didn't even care about that. 2008, they were, here's what happened in 2008. I'll show you, and then we'll wrap it up here. 2008 was pretty interesting. I looked at it a gazillion times how they were. And again, 2008 is a different animal, but I'll show you, I'll give you an example of what they did there. All right, so 2008 is right over here, right? The start of it. I want to go back to 2007 because that's where they were long. All right, so basically this dip here, this is 2007. You see this dip? They got all in there. Okay? For this move, as the market rallied here, this is a chart of SPY. As the market rallied, they started putting hedges back on little by little. Okay? And then here, when the market started to roll over, here, they didn't put their long position back on. Okay, so they were still hedged. You get a little bounce. Then here, now this was the tell here. This is where they usually would get back in and take hedges off. They put hedges, they added more hedges on. So they wanted no part of this rally either. So they were basically max hedged for this whole move south. This whole thing. And they didn't get all in long. They didn't nail the lows in 09. See here? They didn't get long there. They got long here, all in, which was interesting. So this, like if we were following them at the time, right? They wouldn't be all in long here. So we'd be like, oh man, maybe this rally is not legit. And then, you know, the market had a sick rally, sick. I was under my bunker anyway at that time. I'm not going to lie to you. So even if they were all in, there's chances were slim and none that I was participating. I was in my bunker. I liquidated all my bank accounts and I was ready for war. Okay? I had no interest in the stock market. I'm being honest with you. That's how scary shit was. And then you had this rally here. Things started getting better, whatever. And then this first dip, that's where they nailed it. So that was 2002, 2007, 2008 into 09. But yeah, all this for me is a mirage. Like I don't even remember it. That's how crazy it was. I wasn't trading. I wasn't active. I was managing money at the time, client money. And I wasn't invested for a ton of this downside. I was just in cash the whole way. But me personally, I was more worried about, like, let's say I wanted to buy this low. I had more concern about whether my money was going to be at that brokerage firm or not. I told you guys, you know? So I was like, oh man, maybe we get a short squeeze here. It wasn't even worth my while in keeping money at that firm in my eyes. Because freaking Merrill was going under. Merrill. When Merrill went under, we said the bull Merrill is being forced to get bought out here. They're going under Merrill. Let me get working on that bunker right quick. So don't let anybody fool you. I was shorting this and that, and they're full of dog shit. People were, all the players that I was around, people were scared to short because they didn't think their money would be there tomorrow. They wake up, market opens, and you try to pull up your account, out of business. So it's a different animal. You understand? You see what Powell did here with the bazooka? Bernanke didn't do that till late. He let Lehman go under. He let Lehman go out. Powell fired a bazooka here before anybody could say credit markets are tight. Bear Stearns, he let major firms go south. It was, there's books and movies on it. The economy was on the brink of devastation. Nothing left. That's how crazy it was. AIG was going to be it. AIG was on the verge of default. It had tentacles everywhere. Insurance, banks. It was tied to everything. If AIG went under, it would have been all out Armageddon. But so that's why, everybody compares it to this. This wasn't a correction, a crash. This was a credit crisis like you probably won't even see again. I don't know if you could see it unless the Fed defaults. You know what I mean? The Fed would have to go under. Like that would be the crisis. Bank of America was owned by the government. Do you guys realize that? Bank of America was government owned. Yeah, exactly. Park some money in Bitcoin. Yeah, Bank of America was government owned, and then the government got out of it. Fannie Mae, Freddie Mac, those mortgage companies, they were the first to blow up. It was crazy, guys. So that's why, I like to look back like you guys do, but you can't compare what happened then to now. It's a whole different ballgame. Whole different ballgame. Can something happen in comparison to that? Of course it's possible, but it's going to be something totally different that we're not aware of. You understand what I mean? Nobody was aware of that. Nobody was prepared for that. Now that couldn't happen because it happened already and all the banks are prepared for it. Right. So everybody was worried about the corporate bond market. That was the fear here, right? In 2008, Joe? That's hysterical. You nailed you called the top. What was I saying? Oh, the corporate bond market was the fear, and Powell put the fire out before the fire even started there. Credit spreads exploded. It was mayhem, man. It was mayhem. I'm telling you. It's what we have now. and 10 other things going on. This is a whole different animal. Here you have a forced economic lockdown worldwide. You know what I mean? They forcefully shut down everything. And it's a different story. There, things were shutting down. Las Vegas Sands, who had no problems. You understand, like the economy now, we shut down, so nobody's buying anything, nobody's doing anything. Main Street was totally normal. Nobody knew what was going on. Las Vegas Sands traded down to $1, exactly $1, $1 a share. You know why? Because they had no access to credit. Their business can't function if they can't access credit. So the casino almost went bust, not because business was bad. Yeah, liquidity crisis, exactly. Yeah, I just think, Mark, it's when you got the Fed involved, all the things that you normally look at that may be signs of caution or deflation and stuff like that. You got the Fed in here rigging the game. They're rigging the game. I'm not sugarcoating it. They're rigging the game. Doesn't mean I'm not going to try to take advantage and make money, but the Fed rigged the game. Yeah, you got to adjust, and you got to, it's a casino. When you realize we're gambling anyway, no matter what you tell yourself, no matter how much you lie to yourself, we're gamblers. Now, you don't have to be a degenerate, right? You could take a professional approach to it and try to find consistency, but this is a casino. People placing bets all day long. That's what it is. Exactly. That's how I look at myself, Ani. Or I kid you not. I kid you not. That's how I look at myself. I definitely don't fall into the trader category. I don't trade. I can't come in and just trade anything. I have my edge and I place bets. That's what I do. I can't trade Bitcoin and make money. I probably get walloped. What is the hedge indicator? Oh, no. When the CTFC data, you see their positioning. So what happens, like right now, they're long something absurd. I don't know what the number was. It you guys probably saw from my post. How many million contracts are they long? Or whatever it is. You guys remember what I posted on ES, the Sharpie position? So when they hedge, yeah, they get long VIX futures, and they take down their long exposure to what I was mentioning, fully hedged. So they're totally hedged. They got no upside exposure whatsoever. The CTFC data, but the problem is if you're looking at the raw data, you got to be an accountant to figure it out. So there are indicators you can look at that stuff. There's a whole bunch of indicators, but we look at a specific few that measure, what the spec money, how they're positioned, and the term, we call them Sharpies. The term is commercial hedgers. That's what they're called. Dealers, commercial hedgers. So yeah, FedEx does, right? So we likely see at least off the open some follow through on this cyclical stuff. Wow. FedEx look good too. FedEx, look at that. That's not a nice spot there, Joe. Right here, you had earnings though. Same thing. They all look the same. Nice rip. Niner. It's okay. Breather. And you got to pop off earnings. So now you might see some money pour into these things, anticipating better numbers. That's what might happen here. So we'll see what happens. We'll see how it plays out tomorrow. Implied vol, I don't really look at that stuff. Not really. Because again, I'm not trading earnings or earnings action, stuff like that. I'm not buying for earnings. So usually when I'm swing trading options, I'm buying outside of earnings with time. PCG. Yeah, PCG. Let me explain that and then I'll run. I could talk to you guys about this stuff for 6 days if I don't go here. Hold on. GAN. That's a good looking name too, GAN. What is this? PCG. Oh, here it is. So this is what they did, right? It came out to this. August, $10, $12 call spread, and they sold the $8 puts to finance it. And for a credit, so they actually took in 12 cents off the combo. All right, so they sold the $8 puts with the stock close. 887. All right, so they sold the $8 puts and they used those proceeds to buy a call spread. $10, $12. $12 would be here. They're looking for, they're looking for a bounce. They think stock doesn't have too much downside and should trade, north of 10 and above 12, they're not interested, It's a nice bull combo. It's probably Tepper or somebody. Yeah, Micron was good earnings. We'll see if there's any other flow around this. The only thing that I could say negative about PCG might be earnings related. That's the only thing. I don't know the earnings date, but it might be earnings related. But it's not a bad spot anyway either. Not a bad spot at all. This thing used to catch a ton of action. It doesn't catch action anymore. Little sweeps. But yeah, the semis look good, Tree. The semis look good. All right, but don't get concerned if we have a little bit of a pause here and we're still caught in this spider web. Until we see flow explode, we want to still be tactical and take advantage of the bullish signals. And then we start seeing missiles fly. That's when we got to change the game plan a little bit. Get more aggressive, that's all. Nah, I don't really follow dark pool too much. I don't follow dark pool much. I heard there's been some dark pool buying though, right? Yeah, gamma I follow. But there's like different forms of gamma now too. But yeah, I follow gamma. BCS? I don't have, oh yeah, BAC. Yeah, I have plan and BHC. Those are the only two option full positions I have. You know what I mean? Everything else, little equity, and like, for example, I got little shit that I don't even know what I'm doing. Like I had initial position on this 8 that I bought or some action. I haven't done anything with it, But full positions, I have plan and BHC. Hoping to add to that basket eventually. All the stuff I like though, Tree, recently, for the most part, has been short dated stuff. And I play the equity instead, Like, for example, July calls, I'm not going to buy July calls. I play the equity. So that's kind of why I haven't really added. I've been playing, but just no full-size positions with time. Yeah, we're on the same page. You played those SPY calls? I played actually, what I played was TQQQ off the Qs. But again, not calls. Very nice. There's been some nice ETF action the last couple of days. Yeah. Good stuff. All right, guys. Always a pleasure. Anybody who's new, wallstreetjesus.com. If you're looking for more information, you'll find it all there. If you're new to all this sweep, sentiment, all that stuff. All right, but good luck the rest of the week. If I don't see some of you guys, have a happy holiday, 4th of July. Stay safe. All right, and I'll talk to the rest of you mañana. Be good, everybody.